Hello, everyone, and welcome to another Block Chat. This time we have a special edition of the Block Chat because we're presenting the next project to go on our launchpad. It's a project that is based out of the UK, but has as well a footing in Switzerland. And I have the pleasure to have with me today Jens, who is the CEO and founder of Landhive. Jens, welcome to the Block Chat. How are you?
Good morning, Dennis. Very well. Thank you for having me.
So, you've been in real estate for a long period of time, right?
Yes, it's been a journey. I suppose it's a good thing to give you a little bit of a background here, and I think you can hear from my accent that there's a mixture of different accents going on. So I'm primarily South African, and spent some time in Australia, and I've spent quite a large portion of my career in the UK, based in London, and I've been in Madrid, and I'm now currently based in Switzerland. So the accent reflects a lot of those different influences. My background was in the beginning of my career was finance. Particularly, I worked with Citi Group out of Australia on their derivative structuring team, and then I moved over to London, and I worked for the Schroeder Salomon Smith Barney entity that came in there, covering Europe and the Benelux region in terms of risk management and structuring. So that was my background. But deep down, I think I'm a frustrated architect, and architecture was my go-to at university, and I didn't do it. So I wanted to get out of just looking at balance sheets and profit projections, and I wanted to build and create. So I moved into the real estate sector, initially through working with a non-profit charity that was building housing for ex-servicemen. That was in London. And then from that, I started property development. And that went through to over 20 years of experience with projects in the UK and in Madrid. So that's a bit of a background.
That's amazing because a lot of times, we get people to come to tokenization from different angles, right? And sometimes they come from the finance side, sometimes they come from the tech side. But it's great to find when you get people that come from a strong background in finance, but a lot of experience in real estate. What kind of brought you to found Landhive? What's the story?
It's a really good way to put this in context. And my interest in tokenization actually goes way back to actually fractionally trying to buy a beach house with friends. If you go back to that, the old, 20 years ago, you looked at that, it was a nightmare because you had to deal with all of the agreements and the paper copy. And so that was always been my interest, is, looking at real world assets that we can divide. So if I put my developer hat on, and my experience with the development that we have in Brighton is, real estate is inherently illiquid, specifically in a market like the UK, where it has a fairly, I dare say, antiquated legal system in the process. The planning process is frustrated, and developers are hamstrung by traditional lending. That's one. Secondly, access to the UK market, or the property market in the UK, is also not easy if you don't live in the UK, or if you don't have access to the required financing. And then thirdly, the development that we looked at in Brighton, where we built this signature development 10 minutes from the beach, in a sort of a deco modernist style, and the flats were selling, but with headwinds coming at us from COVID to the war to high inflation, hard to move all of the properties at maximized prices. So I got to the idea, we said, well, how do we increase liquidity without giving up the opportunity value of these assets? And also how can we maximize the return on these flats if they're potentially suitable as serviced accommodation apartments? So I put the two together and I said, well, let's look at real world asset tokenization, where we create liquidity for the developers and we expand a community of investor base that will invest in that liquidity. So Landhive bridges the gap between the investor needing liquidity and broader investors wanting to access a market like the UK and Europe. So that gave us the idea. And we registered it in Switzerland from a long regulatory journey. We decided to register it in Switzerland, but the majority of the assets will be in the UK because that's where I have the experience, and that is also where our team has the experience. So what we put together there from that perspective is we said, well, let's maximize the team. We've got the operational side, but crucially, we have a property management company that can manage these serviced accommodation assets when they are available for rental.
Yeah, you mentioned a couple of elements that I think are quite crucial when it comes to creating marketplaces. The tokenization part is it's a framework, right? It's how you transfer value from a single real estate onto tokens so that people can kind of buy into those assets from wherever in the world. So the access part is being opened up. But how you structure a marketplace, it has its nuances, details that are kind of important. What I like about your project is one, it operates out of Switzerland, which has been historically, if you in the short history of crypto, kind of pro crypto, right? Nonetheless, there's been competitions, events, a lot of talk about crypto, Web3 in Switzerland. Bloxburg won an award back in 2020 or so in Zug. There's two very strong banks or new banks that are crypto friendly that are all incorporated in Zug. So I see that when it comes to real world assets, you can leverage this kind of environment operating from Switzerland, and then being able to kind of drive this liquidity from the crypto world onto the fiat, so kind of on-rail it onto fiat, and then utilize it to finance real world deals in real estate. That's one thing I like from Landhive. The other part is obviously the team. I think in the end it's the team that makes it or breaks it. And can you tell me a bit more about how you managed to get the right people together around an ambitious project in the end?
Yeah, I think exactly, Dennis. I mean, thank you for that. The Swiss, just on the crypto focus, I mean, you can even go down to the train station and buy your ticket with crypto. That's how in the traditional train station system. And also, but bearing in mind, we're using crypto to facilitate the real world assets, but actually this is about creating value-backed investments. The team is crucial, and for us, and we've spoken about this. I spent a long time working with some of the London law firms, with CMS London being one of them, and CMS hosted a series of events at which actually I did a small talk, and from that I met my co-founder, Chris, who has a extensive operational background. He developed and worked with a large co-living company, as well as other operational companies. So we added the operational, he brings a strong operational experience as well as tech experience. And then my CTO is based in Switzerland. He is seasoned and has extensive experience working with tech projects, implementing tech projects, and more than the point, has a broader knowledge of the range. And then we have a business development operator who's now based out of Munich, but who's very involved. But also crucially, we have this operational and property management capacity under Hakan, which is based out of the UK. So if we add all of that together, the team is there. We have, in this case, we have, our first assets, which we are bringing to the market. And, this this came from, excuse me.
Let me bring
sorry.
A slide or two here. This is the slide deck. By the way, everyone can go to our forum and check the slide deck themselves. This is the asset that you were mentioning, right?
Exactly. So the Rocks project is a key example. We've sold up to nearly 80% of the development. There's 70 apartments. It has communal spaces, co-living, cafe, gym, everything focused on creating a sense of community in the development. We have, of this development, we've taken 10 apartments, of which 3 are now coming live, which have been sold to a series of equity investors with traditional debt. And we have another 7 apartments that we're bringing to the market. So these first 3 apartments, as an example, will be rented out short term to maximize the revenue of it. And of those 3, we want to do it as a pilot to tokenize a portion of the economic benefit and the equity on the Block Square platform with Ocean Point. So it's ideal. It's suited to the serviced accommodation sector. It's 10 minutes from the beach, 10 minutes from the station, and you can increase the rent. So if you give you a bit of an idea, we're using Rocks as an example here. But if I just look at the UK in terms of the market size of the UK, they have 230,000 new build apartments or houses are currently being built a year. They're trying to target much more, but the planning system doesn't allow it. Of that, we've identified, well, let's say 23,000, 10% of it is suitable for our version of the serviced accommodation model. And if we just tokenize 1% of that at, let's say, a 50% equity tokenization, we're looking at over 40 million of tokenization, and that's just in the UK. So if we take that and add that to our Spanish experience and the European experience, I'm hugely excited about this market, just in terms of the prospect and the opportunity. And the other main thing is here, we're looking at verified, finished assets that can then be rented. So, we're actually bringing each one, we'll bring to the market. You'll see the apartment, what the apartment is, and you see how it's going to look. And then we can attach the rental metrics to it and say, we're earning 30% above market on the rentals, as an example.
I like the approach because I always say, look, the development part, so development financing is a tough cookie to crack. It's tough for banks that have presence in there and put all levers in place to really kind of monitor the process, and things go wrong there as well, and it's a much riskier type of investment. However, if you bring ready-made apartments or ready-made assets that are yielding from day one, the risk perspective for an investor is much smaller. Obviously, the return is adjusted to that risk, but when you add tokenization to it, you can expand your basically stake in a specific asset as time passes. You don't need to go full in or nothing, right, as a token investor. So I think this is kind of you can adjust your exposure based on your portfolio kind of overall composition, and I think this is where the first source of liquidity for tokenized real estate will be directed into the assets that are already there, already yielding, have a lower risk profile, but have an easier to understand risk perspective, right? Because it's easy to understand. There's an apartment or there's several apartments. They're rented out short term, long term, mid term. It's easy. Everybody gets it.
Exactly, Dennis. I mean, if there's a few pieces at play here, but like you said, if you start off with the funding and the financing, the development financing for these projects often start putting pressure on developers to, of course, sell, and they roll over their funding. It's expensive to roll over their funding, so it's actually if there is a bank loan against these properties, it's in the interests it's their interests if we can start generating revenue from these apartments and selling or sharing the economic benefit of that with the token investors, so that the real estate developer can actually sell these properties at a premium when the market conditions are correct, and doesn't tie the owner of these completed assets into a sale that has to happen within this financial year, for example, because they have to repay the loans. So this way, it's giving them some liquidity, but crucially, and this is to your point, the token community and token investors that can buy these can diversify their risk across a selection of apartments. They are earning rental revenue, which is managed. So the whole headache, it's effectively hassle-free because it's all handled for them. And they still have the benefit of leverage, really, because there's a loan attached to it. In some cases, maybe not. But it suits, if we were going to look at it suits the investor that wants the flexibility of diversifying his exposure. He wants real estate exposure, and that might form part of his overall investment exposure, but it's a key part of it. And it would also allow them to then continue renting if they're renting where they're renting, or longer term fund their ability to buy. So that's why I think this is so exciting, because we're opening it up. We're broadening the access to these assets that are often impossible to get or very difficult to buy, especially if you're not in the UK. That's one example, or in Europe. So that's what to me makes so much sense. And when we started talking and you described your journey and your regulatory journey, and then also the fact that you're setting up in Luxembourg with this really innovative platform, it makes so much sense from our perspective to work with you on it, because the opportunities are huge.
I think I had a discussion earlier today in a meeting with somebody who's in real estate in Canada, and they come more from a traditional side, and obviously getting financing in the last 15 years or more in Canada was quite easy. It was like a no-brainer in terms of real estate. You would just add up more and more to your portfolio, just do things because things were growing, right? But when things reverse, the whole debt financing structure becomes really, really scary. It's, for people that are watching us today, maybe they're more into crypto and DeFi, but, just every time there's a shakeup in the market, there's a lot of defaults basically happening in crypto, right? So it's a cascade, right? Because prices go down, the collateral value in those contracts falls, and then there's liquidations happening. And it's kind of the same thing when it comes to debt in real estate. If you have these valuations, but slower, obviously, but what it creates defaults, and nobody wants defaults. Banks want yield, investors want yield. Nobody wants defaults, right? And the only reason defaults happen is because there's a loan, and in that loan there's a repayment date, and in that repayment date there's an LTV, and then if those metrics fall apart, everything falls apart. And then there's processes that nobody wants to do, but they happen. With tokenization and how we're structuring things is, and you mentioned it, nobody's forcing you to sell below market value. Everybody's happy to wait because there's a yield. Everybody's getting a yield out of it. But when the moment is right, then you can sell the asset at the right price and everybody makes money. And that's the main difference in the position, is that tiny little detail. Are you exposed to debt, or do you have an obligation towards your investors that's much more like equity?
That's crucial, Dennis. I mean, the way you've summed it up is actually crucial, because it's that, are you exposed or are you beholden to the debt provider? And in that case, often it's not just the LTVs, it's actually just their fees to roll over a loan to the next financial year. And they will then, because the commercial rental market, a loan market is not as regulated as the residential market, they will charge fees. So it reduces the value and reduces the profitability of the projects. And at the end of the day, our focus is we need to be building and creating and getting developers to actually do these projects successfully. So the tokenization opens up that flexibility for them. And this is why we focused on, Landhive as a real world asset platform. It's a big mouthful, but it's about creating liquidity for the developer and creating the investment opportunities for the token holders without any of the hassle. So it's a win-win for both sides. And the key there is you've raised it, is that not being forced to sell your tokens, and the developer's not forced to sell the asset before optimal market conditions. And just to close on that one, it's fine when you've got a market that's going in one direction, which is, if you look at London, it's been a safe one-way bet for the last 15 years. You look at Toronto, places like Vancouver, it's the same story there. Some of the competitors or people that we've spoken to there. So if you're in that market and you don't know that it's going to go up by 5% every year, you want to find assets that are quality assets that are generating an enhanced yield, but is still growing at a sort of a measured pace. And that's what tokenization will allow our community to access. And we give the developers the power to go ahead and start creating other developments. So
You mentioned market size. You said 1%. I like that part, because a lot of times when I was pitching tokenization, 6, 7, 8 years ago, and I didn't know how to measure market size, because you don't know, right? You say, well, if we just tokenize 1%, this is what we're doing, right? But there's always a road, a path. How do you get there, right? How do you and Landhive plan on getting to the 400 million we mentioned in the UK? Starting
40 million
from
40 million, 40 million of tokenized value.
40 million of tokenized value,
Yeah.
right? We need to get there, right? And so it's one step at a time, I guess. And what's going to be the first step?
Yes, this is crucial. I mean, first of all, like we discussed, we want to do these 3 apartments as a token, as a pilot. Show how they look, show how they're being managed and how they're rented. We then want to bring another 5 apartments to the offer, which would then be rented the same way. And in this case, we would actually open up the whole equity value of the apartment to be tokenized, and Landhive will be the operator and the manager of the asset. That, if we can show that, and we can show that we can find the token investors and the liquidity, which we can give the developer, that of course emboldens developer. In this case, we control the development. It's simple, but that would then allow us to speak to other developers in a similar situation, and we can show that we have the capacity to actually provide this liquidity through the token system. It's going to also require a go-to-market strategy from our side, where this is not just about the developers. This is crucially about the community that is being built up and is getting excited about the prospects of investing in these assets, or in the economic benefits of it. And it's about building that community. So we've got a social media strategy. We're working with a marketing agency that will be running a series of AMA sessions. We're going to be talking through some paid advertising to increase that, but it's more about building that community, channels on Discord, Telegram, Twitter, and Instagram, and also I think to be quite proactive in communicating with that community through those channels to keep them updated. Otherwise, it becomes a sort of a static, this is what we want, and it needs to move as the market moves.
So the strong point, definitely, you have an asset, you can start doing your kind of pilot or your launch project, right? And that's something you can execute right away. With the Launchpad campaign, hopefully successfully completing, will provide the whole infrastructure in the marketplace for Landhive. By the way, Landhive has built as well their own solution so far. So you have built an MVP, if I'm correct, right?
Yes, at the moment we have a solution, but the solution is a off-chain solution.
Okay.
So what we've done there is, let's say the example of apartment 4C. There's 3 investors. They've invested 30% each of the equity. We've created a UK special purpose vehicle. There's a limited company. They are the shareholders and the directors of it. And of that basis, we've then gone and got funding, and we're running it on that basis. So that, if in terms of looking at the equity piece, that's on the traditional off-chain side of it. We haven't issued tokens against that because it's at this point the market is not ready for that tokenization on the equity side. But of course, like we've discussed, the market is very much open and available for the larger economic benefit tokenization side. So we've done that, but we'd like to move that forward and move it to actually looking at an asset either completely tokenized or with some part equity, part token.
So you always have kind of the ability to, on one side, do one portion traditionally, on the other side, do it as well, tokenized, combine one and the other, and kind of to reach the goals. Because I think one of the interesting value propositions to traditional investors as well is saying, you know what, you can invest in equity traditionally, but if you let us tokenize your equity, you can then as well find liquidity through a secondary market in tokens. So, or combine the two, right? You invest a part in equity, but you also invest in tokens. So if you invest, I don't know, if your ticket is 100K, you need to do 50% tokens, 50% equity. The equity gives you that kind of certainty, let's say, or you're used to it because it's something you've done before. The tokens are something new. So it gives you safety, the feeling of safety, and then the tokens, and then you can compare the two. How are the two yielding for you? How are the two doing for you? And it's an educational step, let's say, for traditional investors to adopt tokenization. And I think that's kind of powerful as a tool that you can leverage, perhaps. We've got another couple of minutes. Is there anything specific you'd like to say to our community?
I would like to say that we've looked at this, we've talked about equity and we've looked at the tokenization. And if we always looked at the traditional equity investor, that might have been the traditional investor that had the ability to go and buy a whole apartment. Our real drive here is to broaden the ability for investors anywhere to invest in these kind of projects and be able to diversify their investment across those projects without, in a secure environment, using Web3 technology and all the benefits that the Block Square and the Ocean Point system will be bringing to it, and to help us power this move towards the next generation using real-world asset tokenization as the medium and the driver for it. So we're very excited.
I'm excited as well. I love what you guys are doing. I know a lot of things you've been doing up until now. We've discussed it, and you rarely see a project that really takes it that goes through all those phases, which are kind of similar to the phases we went through at Block Square. And here we meet on halfway and kind of join arms to make it happen. And I think that's brilliant. To our community, the Launchpad campaign is gonna go live soon. Go check our forum with the exact dates when this is gonna happen. I'm sure gonna pledge my BSD to help support Jens and the team. What I want to say is, just to close up with this, where we're taking Ocean Point into this liquidity engine, where basically anyone can upload their real estate asset and gain some kind of liquidity. I believe that the type of assets that Landhive is bringing onto the system are crucial for its success, because this is yield generating assets, and that drives economic activity, and that economic activity drives value up for all participants. So really excited about this collaboration, and Jens, good luck for the campaign.
Thank you very much for giving us the opportunity to talk, Denis, and we're looking forward to working with you and the broader community, the Block Square token community. Thank you very much.
Amazing.
All right.
Thank you. Bye.
Bye.